I think so. The first thing is, look, if Elon Musk was to talk about gold, no one's going to care too much because everyone knows about it, everyone's heard about it. Same with any traditional investment class that exists. But the moment he talks about Bitcoin, now that's something new for people. Most of his followers may not have heard about it till the time he spoke. And this is true for not just Elon Musk, but any influencer who has a large following, where the moment they talk about it, all their followers become curious, and the moment they become curious, what do? They go to the internet to read up more about it. And this is true for anyone you talk about. If you either know about Bitcoin and cryptocurrencies, or you've just vaguely heard but not really paid attention. So the moment your favorite celebrity or your favorite idol starts talking about it, your curiosity and your interest in this new asset class uh, goes on overdrive, and then you tend to go online, read about it, and then once you understand, the natural progression is, how do I get involved? And to get involved, the best and the easiest way is to buy a bit of it. And that's exactly what has played out here. And people are surprised that he tweets and why is the prices going up. Now, the number of Bitcoin in the world is always going to be constant at 21 million. And I think about last year, there were about 100 million people in the world who used to own Bitcoin. This year, in about 6 to 8 months, in the last 6 to 8 months, that number has grown by at least 50% to 150 million people. So the thing is, when a same limited supply asset class gets bought by 30 to 50 million new people, it's expected that the price is going to go only upwards because the quantity remains the same. And that's what is exactly playing out. Now, the other aspect is it's a huge number of people who enter. And in general, this asset class is owned by a smaller number of people when you compare to something like gold, because gold has been there for 80, 100 years, compared to Bitcoin, which is only about 10 years old. And if you objectively look at the time when Bitcoin started being traded, I think it was only in 2012 or 2012 around. So it's about been 8 to 9 years old. And this all of these put together are the biggest reason why you see a lot of volatility. You see that the moment a celebrity tweets about it, a large number of people go and buy it. And so I would say it's probably something we've not experienced for a single reason, because this is probably our generation is experiencing a brand new asset class for the first time. Most of the asset classes, most of the things that we've done in the financial world, they always existed for over 30, 40, 50 years now. And this new asset class just baffles us to know that what is happening. Why is there so much of volatility? Why is there so much of activity? But let's face it, this is something innovative. This never existed. And we are probably the generation one. We cannot say that for any other asset class. We cannot say we are generation one of this asset class, but we can say that about Bitcoin. So all of these factors are the ones that are driving up the prices, that are bringing so much of interest, and the media also wants to write about it and cover it, which again amplifies the whole tweet or the talk that Elon Musk does. And at least with Elon Musk, the thing is, if I tweet about it, maybe people in India will talk about it. When Elon Musk talks about it, the entire world takes notice and covers it. So he has a massive ripple effect in the whole media when he talks. And that's all of this is what is adding up to the whole Bitcoin price movement, and even Dogecoin, for example, when he spoke about it. It's just he can create massive ripple effects, which we are seeing in action right now. I think volatility definitely exists. We cannot escape that. We cannot deny that. It's evident. But what we should look at is how has the volatility changed in the over the years. And if you look at the whole Bitcoin prices, they've been getting more and more stable as Bitcoin is being adopted by more people and as the market cap increases. Even though today, for example, at its peak, I think Bitcoin hit about $1 trillion. Now compare that with gold. Gold is over 12 to 13 trillion dollars. So there's still a large gap, and this gap is one of the reason why you would see even small investments in a few $1 billion can move the market, and this will be true for a while to come. Maybe when once Bitcoin hits a $5 trillion or a $10 trillion market cap, I think you'll then be there will be news if it moves by maybe a couple of percentages. But today you see it move by 5, 10%, 15% overnight. If there is anything negative or positive that comes up, so I would say it's a function of the liquidity, the amount of money that is flowing in the market behind Bitcoin or to offload Bitcoin, and since the market cap is lower compared to other traditional asset classes that we tend to compare Bitcoin with, this volatility seems to be huge. But I would say if you look at the history, the volatility is reducing, which is a good thing. Now, coming to, I think the other aspect was you're talking about how an institution like Tesla, for example, they buy it. The moment they buy it, it's more of a stamp of approval for a lot of people, especially in the retail sector, where they see that a company with resources to go deeper into researching and understanding something has invested. So that's taken as a signal by people to say that, okay, let's also buy this. And this again drives the prices in the upward direction. And then you hear about Tesla saying we will not accept Bitcoin anymore. Then again, people are like, what's happening? So in a way, people are closely monitoring and finding credible sources to get insights on whether they should go ahead with Bitcoin or whether they should exit it. And now the bubble aspect. Look, if you look at the whole, the first wave of this whole technology was the internet. And we've seen a massive boom and bust cycle for the internet. And I think around 2000, when the whole internet bust happened, a lot of people said, in fact, there were a lot of media articles I was going through the other day, which said that the internet is over and no one will use the internet. There were articles that said that people are leaving the internet and going back to the real world. And today, if you look at the last 12 months or so of the pandemic, we've been able to survive and thrive in the pandemic all thanks to the internet. So it's gone from being called a bubble to today being the way of life. And I think the same thing is playing out in the whole digital assets part, where it's being called a bubble, but a bubble only gets created and gets blown out and then never reappears. Now, if you look at Bitcoin, every 3 years has been making a peak, and the peak is always greater than the previous peak. And that's true from 2017, when the peak was $20,000, to 2021, when the peak has been about $55,000 or $60,000. So that gives more confidence to the investors that this is not a bubble, but this is more of a rapid growth cycle for a new asset class. And I think these are just indicators. We can learn a lot from history. And the indication is that if this continues this way, there's going to be greater peaks to be made as more people buy Bitcoin. So I think net, there is definitely, we cannot deny speculation, because it's an innovative technology. Now, you don't know how innovation gets adopted. How soon will it get adopted? It might take 3 to 5 years for Bitcoin to go from, let's say, 150 million people today to maybe a billion, or it might take 10 years. But at least the last 3 months, if you look at the number of people entering, it seems to be that Bitcoin might hit that escape velocity, which will push it to a billion people in the next 2 to 3 years. And if that really happens, then the people who are investing today will be seen more as visionaries rather than speculators. But a caveat is very hard to say what direction any technology would go, and only time will tell us whether this was speculation or this was sort of a proper bet or a hedge on innovation. I look at all of this as the path to regulation. It's never going to be a smooth path, and you definitely need people who are for and against something before you can regulate it. And I think that is exactly what is playing out, not just in India, but the rest of the world. The good thing is we can get some signals to understand how it is going and in what direction. For example, look at the global regulatory landscape. Every country today is trying to figure out and understand how do you regulate this new age asset class, and who's the right regulator. And surprisingly, no country has even now been able to pinpoint and say, okay, regulator A or regulator B, would it be the commodities regulator or the securities, or would it be the central bank? So this confusion is not just in India, but globally. And that sort of gives me some comfort, and it should give us all comfort, because we are all in the same boat. So that's fine. The second is, I think, from our government's point of view, until last year, our government has never officially spoken about Bitcoin or said anything about Bitcoin. There might have been rumors, and there was the only thing it came close to was there was a committee set up which came up with a draft bill. But this year, we had our finance minister specifically on a video interview talking about Bitcoin. She said that India will take a calibrated approach towards regulation. So these are all, I see them as positive direction for regulating crypto. And the best thing is that the government has started talking. They started discussing. And that is the right way to regulate. For something that never existed, uh, there's no framework. There's no regulatory framework. There's no mention of it already in the law. So what we are talking about is starting from ground zero, and regulations for something like this is going to take a long time. Just a simple example is the internet. We've always thought, if you look at it, why is the internet not completely regulated yet? Because again, it's something new, and the way internet got regulated is in bits and pieces, in parts. And for crypto, now the question is the same: do you bring in a blanket regulation saying this whole domain has to follow, or do you break it into bits and pieces and say this derivative of crypto is how this is the regulation, and probably another derivative of crypto may not have regulation? And I tell you where I'm coming from when I talk about this is, we've all heard now recently all about NFTs, non-fungible tokens. Now, my question is, if we think about crypto as an asset, sure, we can have some regulation. But what happens where crypto is used for media, for buying and selling of images, buying and selling of videos, and that always existed on the internet and the offline world without any proper regulations or any specific regulations around them. So it's going to be much more difficult as new use cases of crypto emerge for bringing about a blanket regulation on that, which is why regulation of this sector is not never going to be easy. Though I think one development that just happened today is where we read a report which says that the government is looking at regulating this as an asset class, a digital asset rather than a currency. And I think that's probably one of the right directions India is taking. But let's see. As an industry, we are doing quite a few things. What we are saying is there has to be some regulation, not on the asset class or the sector, but on the companies that are providing these asset classes. For example, exchanges like us. There should be KYC, there should be ML policies, there should be customer protection. So instead of regulating the technology, I think the regulation of technology providers would be probably the first step forward. Quite a few things. I think the first thing is right from day one when we launched, we've always made sure that we follow some sort of self-regulation, because in the absence of law, I think self-regulating is like the best approach towards getting regulated faster. For example, right from day one, we've had KYCs. We follow AML policies. We make sure that we educate our customers about crypto and what it is, and we provide them with resources so that they can educate themselves. Being open about the regulatory situation, and then I think apart from that, what we've done is, as we formed an association, all of us exchanges in India, and we have a code of conduct that we've just completed, and all of us have adopted, where all of these guidelines are laid out. How that helps is, while you can self-regulate, you cannot make sure that everyone in the industry is self-regulating. So this industry body helps in getting everyone together and follow a common code of conduct. We are going now to the next step, which is, now that you have self-regulated, the second step is to get yourself audited from an independent third party to make sure that these self-regulatory rules and regulations that you have imposed on yourself are being followed by you. So that's going to be the second step for the industry. Apart from that, I think what we are also doing is actively trying to ensure that the government gets whatever understanding of the space is, because if the government wants to regulate, while they can acquire theoretical knowledge, the on the ground knowledge and the understanding of this whole customer base and crypto, that would come from the exchanges that service the customers. So we're trying to send our learnings to the government in the form of white papers, data requirements, whatever that we can. And we look forward to engaging with the government as soon as they get into the stage of industry representations. And the best thing is, because we do all of this, there is no worry for our regulators or the government to come up and put out fires in the ecosystem. It's already a clean ecosystem. What now they can focus on is, how do you regulate this? Otherwise, in the absence of self-regulation, the biggest problem that happens is the governments and the regulators have to first come and try to clean the mess. So the good thing that has happened in India is there's already self-regulation. So you have a clean environment, and now the government can come and just lay down rules and regulations, probably similar. So use our code of conduct as a template. So that was also one of the reasons why we adopted self-regulation early on. In fact, it's been growing month on month. I'll just give you some numbers to get some perspective. Let's look at the trading volume, for example. At WazirX, we saw a trading volume of about $500 million on monthly basis in December 2020. Last month, in April 2021, we saw a trading volume of $5.4 billion on a monthly basis. So that's over 10x growth in just the trading volume. Now, in terms of users, I think the last 3 years since we've been online, we signed up about 2 million customers from March 2018 to March 2020. Then in April 2021, we signed up 1 million people. So we signed up 50% of the people we gathered in the last 3 years in just 1 month alone. And I would say this is an important number to understand the overall growth of the sector, because I'm sure this would be true for the entire sector. So what that means is that the number of people who entered into crypto in India in the last 3 years, half of that many number has entered in just 1 month last month. And if I was to look at this month's number, they seem to be even higher than that. So it's a tremendous growth of new people entering crypto in India. Yeah, I think the most important thing to do, which is common for any investment that you do, is to first understand what it is. And fortunately for crypto, the good thing is there's a lot of materials available online, and a lot of videos, a lot of courses, in fact. It's not just about blog posts and stuff, but there are blockchain and crypto related courses that you could take, which range from a week to even a month or 6 month courses, depending on how deep you want to go into understanding this sector. So there's a lot of material. I would suggest that always make use of all these materials that are available, so that you understand the details. First, learn the base, which is, what is crypto and what is blockchain. You don't need to be a tech expert. See, this is very similar to investing in technology companies, for example. You don't have to be a software developer to be involved or to understand this sector, but you just need to understand the basics of how they operate and what is the underlying use cases of each of these crypto that exist. Where are they used? So do that research. The second is, I think, choose the right platform. Because this is an unregulated sector, anyone can create platforms to offer cryptocurrencies. So there is no stop on that, which means you'll have to make sure that you know the platform that you're investing, you know the background of that platform, the founders, make sure that it's not an anonymous entity or a company that is operating. So all of these things, I think, customers have to do. Then the third is there are enough data available on each of these crypto. Bitcoin, for example, there's at least 8 to 10 years of data that you have available on your fingertips. So make use of that data. Look at how the growth has been. What have been the points at which it has seen tremendous increase? What have been the points at which it's fallen? In fact, when you talk about data, there's a lot of things you can do to get the right signals. For example, one of the data that correlates to the rise of Bitcoin is the number of internet searches for Bitcoin. So if you look at the internet searches in the last, let's say from 2018 to 2021, it started increasing rapidly in 2020. And it aligns with the growth of the Bitcoin prices as well. So there are a lot of these data points that you could dip into to understand the whole market behavior, and then take an informed decision on how to invest, how much to invest. And when you start to invest, I would always suggest people start small. The best thing about crypto investment is, just because a Bitcoin costs you 30-35 lakh does not mean you have to buy an entire Bitcoin. Just like you don't have to buy an entire kilo of gold. You could buy a small 1 gram of gold if you wanted. you could do the same in Bitcoin. So you could start with something as low as, let's say, a 500 rupees worth of Bitcoin that you buy, hold it, learn it, experience it, and then also sell it. So complete that cycle and treat it as a learning experience and an experiment. And once you are aware of it, and then you can go and buy in whatever amount you need. After that, I think the other aspect to understand is the risk profile of this asset class. Since it's just 10 years old, it's a new innovative technology. I would still put this in the whole high risk, high return category. High risk because there's an innovation risk. High returns because it's a smaller market, more volatility, and many more people to get in. For example, since there are only 150 million people into Bitcoin, and the global internet population is about 4.3 billion online users. So you know the potential here. If it really takes off, there's probably 20, 30x more people who can get in. So yeah, I think these are some of the factors that investors should really consider before getting into crypto. So NFTs, I think I'm a big fan of NFTs simply because NFTs open up. So if you look at, let's say, for example, Bitcoin and other crypto, you need to have technical expertise. You need to create a startup or a company to create a new token. But when you look at NFTs, you can participate in the whole crypto ecosystem by being a creator or a influencer. Anyone who believes that they have an audience and a following who would be interested in what they offer can create their own NFTs. These NFTs can be images, these can be audio files, video, anything that you want to create. And you don't even need to be like, let's say, an artist. For example, the other day I was talking to someone who's a journalist, and she asked me, can I create an NFT of one of the articles I write and give that ownership to whoever wants to buy that NFT? And sure, you can do that. Then the other, there was this entrepreneur, and I was discussing with him, and then we realized that entrepreneurs could create an NFT token that represents their time. So a lot of entrepreneurs get other budding entrepreneurs who ask for advice. You could create, maybe 4 or 5 NFT tokens that represent 1 hour of your time every month, and whoever holds an NFT token could redeem it for maybe an hour session with you to discuss entrepreneurship. So there are so many different use cases that you could create with NFTs that I think the next 3 to 6 months will tell us what direction this is going to go. In terms of WazirX's involvement, end of the day, NFT is very similar to, since it's the backing technology is crypto. We intend to very soon launch a platform where you can buy and sell these NFTs. So the creators of NFTs can come and list it for selling, and someone can buy it. Once you buy it, you use it, or you hold it, or you realize that it's time to sell, you could again put it for selling on our platform. So that's coming very soon. Absolutely. And in fact, picking on, when you say India has one of the youngest population, and when you look at the data of the participants in crypto, it's the people in the 20 to 30-year-old range who are the most prominent investors in this sector. And it's true for anything new in technology. Like the early adopters of the internet were again people in their 20s and early 30s. So the most important thing out here for them is to educate them, which is what we've been doing through various campaigns. We've been also running campaigns for getting crypto regulated in India, which will help in customer protection and helping our country see a lot more startups emerge here. Because right now, today, regulation still plays a role in an entrepreneur deciding whether to build for this ecosystem or not. Now, the most important thing is you look at India's progress in the last 10, 20 years. It's been technology has played a large part in that. And the first version, which is the Internet of Information. Now this is seen as like the second version of the internet, which is the Internet of Value. And I strongly believe that India should participate, having a tech a population which is driven by technology and understands technology. I think India has a huge edge if it completely gets into this sector, where we'll see a lot of billion-dollar companies being formed around the crypto ecosystem. Now, how do you do that? Is like, for example, at WazirX, our mission is to make crypto accessible to everyone in India. And the way we do that is by building simpler products, and bringing in more education, and making sure that you make it very easy for people to get involved in crypto. And we've been always focusing on that, which is like we are the entry point where you realize, oh, cryptos, this technology is amazing, I want to be involved. We want to make sure that we are there for you to enter into crypto. So we've been just building simple features like we just launched quick buy, which is a one-click buy option. So the moment you want to get involved, it takes 1 or 2 clicks for you to buy your first Bitcoin. So it's just about making the product simpler and easier and accessible. I think if you can do that, people take their own decisions, and when they take their decision, they need to have a product which is accessible so that they can use it. And that's what we are trying to build at WazirX.